this. All right, what I'm trying to say is maybe speak of all items. When dealing with trade receivables control account, first of all, you would have the balance BD, right? Balance brought down, right? The balance brought down, I should be of a certain figure here. Let's say XXX. I can just write this, but also we would have the closing balance, which if not told unless told to the contrary, you would just say that balance carried down should be let's say like this way. Balance carried down should be on the credit side, usually, in case there is no problem. It should be this way, right? This is the balance. I think I didn't write properly here. It's balance. I meant balance. Balance. Okay, now as for trade receivables, just presume as if you are doing business. This one should be easy. You know, for trade, how does trade receivables increase? Because you sell to the customer, right? Is that right? Hello?
Yeah.
Yeah. So
Yeah.
if you do sell to the customer, then you will have sell. You know, trade receivables is an asset. An asset increases by being debited. So you would have the sales figure here, which is right here, right? Okay, after selling, you can be paid. A customer may pay you. So there is a way to reduce this trade receivables figure by receiving payments from customers. So I could say cash received from a customer. If the customer brings cash, this would reduce trade receivables, and then there should be a credit nature of this way, right? And then you can proceed. You can have maybe instead of the customer paying you, you could have offered a customer a trade discount. So if you offer a trade discount to your customer, what happens next? If you offer a trade discount, that means trade receivable, what you expect to receive would be decreased. If I decrease trade receivables, that means I would have to go on the credit side and say discount allowed. I hope everything is cool until this point. Okay, now let's go to the bad debts issue. If you have the bad debts mean that you expected, let's say you expected to receive $10,000, but you only have to receive $9,000 because $1,000 is just like bad debt. So you presume to have been paid something which you have not received. So bad debts usually should also stay on the credit side is cash received. So I would say here bad debts, right, of this figure, this amount. Now, if it's a bad debt reversal, maybe during the year start from January to December. During March, you wrote off bad debts and then you included them in the trade receivables figure. But maybe on, let's say on August, you reverse this bad debt. Some of these bad debts were reversed. So if you reverse the bad debts, then it goes that to show that you expect to receive that amount from the customer. If you expect to receive that amount from the customer, that means you'd have to increase your trade receivables. And so the recovery of bad debts should obviously stay on the debit side. So in case I have the bad debts which I wish to recover, I could say here recovery of bad debts. Recovery of bad debt then should stay on the debit side. I think that's what we are trying to ask, right?
Yeah. So
Yeah.
so so it's not it posted to the credit side of the trade receivable, like the one that is going to the cash,
Like the one that is going to
to the cash account.
okay, you are speaking of recovery of bad debts, right?
Yeah.
Let's say that what I'm trying to what I'm trying to say. You know you need to understand one thing. At this point here, I'm not debiting recovery of bad debts. I'm debiting trade receivables. You see this?
Yeah.
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 For example, let me tell you one thing. Maybe you had someone, you asked very, very good question. Let's say a customer was owing you $100, right? Which you deemed that you would not be able to receive, maybe due to the financial situation of your customer. So you had this bad debt of $100. But maybe it comes that the customer pays you. You just find out that, oh, the customer has paid me. So if the customer has paid me, what should I do? Maybe the customer has given me cash of $80. I've received the cash. So it's obvious that I would have said debit cash by what amount? Let's say by $80, right? Is that right? I will have debited this much amount of cash. So I would say, oh, I have cash. I debit cash of $80. And then maybe since I've debited cash, I would say, oh, so what should I credit? I've debited cash. If I've debited cash, then I will have to credit something else. Then you would find something which you have to add. You have to credit. You get that? That's why I'm trying to say that here I wrote recovery of bad debts. You know, the recovery of bad debts comes in two matters. It's either you receive cash, a customer pays you, right? It's either a customer pays you, or maybe it's not that a customer pays you, it's something else that happens. So, for example, let's say I have trade receivables and I know that I have the bad debts. For example, let's say I have bad debts. So I say this one. Let me try to give you an example. Usually, for bad debts, we debit. Bad what? We say bad debit, bad debts, and then we credit what? We credit what? After debiting bad debts, what do we credit?
I credit trade receivables.
Very good. We credit trade what? Receivable. That's why you can see here. I hope you see this. Debit bad debts, credit trade receivable. That's why initially I told you that you debit trade receivables, you credit trade receivables. You see, this is a trade receivables account, and I've debited it with what? With bad debts. Meaning that on the bad debts account, I would go and what? And debit there, right? So that's why if you are trying to recover the bad debts, we are trying to recover, we are trying to reverse what previously happened under trade receivables. That's why let's presume that maybe you have not received the amount. We just mean that, oh, maybe I did it wrongly. Maybe I anticipated that the customer won't be able to pay me, but maybe I anticipated the wrong customer. So I'm trying to actually to rectify my books. So in case this wasn't cash, I would say that initially I debited the bad debts account, I credited the trade receivable. So instead of debiting the bad debts account, I would go to the bad debts account and credit it. Credit bad what? Bad debts, let's say by $80, by $80 here. And then I would go back to the trade receivables. Now this, you remember that I wouldn't have received the cash. If it was cash, no problem. But if it wasn't cash, I would say, okay, let's go and increase back our trade receivable because initially we reduced it expecting not to receive that amount. Right. So this is what I would have done. Have I answered your question?
Yeah.
Okay, now the other thing maybe you also need to know when dealing with this trade receivables control account, there are things like contra. I think we spoke of them before. I told you that you can have
Yeah.
something called contra. Contra reduces trade receivables amount, right?
Yeah. Yeah.
But also it reduces trade payables. So whenever you have something called contra, you know that trade receivables is of a debit nature. So to reduce it, you should go on the credit side, something like that. But also there is something else called refund. I don't know if you have ever had something like that, refund. There is something called refund.
Yeah.
The
Refund.
yeah, refund. You know, you have the trade receivables, but we are speaking of the refund. So the refund means that by trade receivable, you have to receive something from the customer. Maybe the customer only had to pay you $10,000, but mistakenly they paid you $12,000. If they mistakenly paid you $12,000 and you know that if they pay you, you have the cash received, it means that the credit side would exceed the debit side. And even this balance CD could be found to be on the debit side instead of this credit side, right? So in that case, to amend this matter, that means I would have to reduce this cash receipt, but I already received them before. So instead of reducing this cash received here, you just come and write here refund, and then you put your amount there. So on the trade receivables balance, the refund should stay on the debit side, right? Just this way. And so you can just find, I hope you know things like the thing called something called returns inwards. Do you know that?
What?
Returns inwards or sales returns.
Return is yeah.
On which side should it stay?
Credit side.
Credit side. Because it means that I sold something, but that thing was returned. So it's no longer part of my sale, right? So instead of
Yeah.
coming and deducting it from this sales here, we say no. Just go on the opposite side and recognize it. So that's why we can come here and say, oh, I have my sales returns, or let's say returns inwards, returns inwards. You can go there and find and have something like that, returns inwards, right?
Yeah.
Yeah, so actually you can have a lot of issues arising here. It really depends on what you have been asked to do. If you do this, actually, you won't face any single problem. All right, after doing this, I think we can proceed with something else. If you haven't subscribed, actually, I'm going to send it to that channel. You can subscribe for regular updates so that whatever happens, whenever you can just understand.